Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, October 25th, 2022. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. Right now, a super narrow range heading into the RTH Open inside the previous day's range. You can see here the developing daily bar right now. Very narrow range, 27% of ADR. This thing's been averaging over 100 points on a 10-day average basis. Right now we're at 28 and a quarter ahead of the RTH Open. Additionally, on the intraday time frame, 60-minute charts, this looks a bit toppy, a little bit like a rounded top at the moment. Very narrow range that's developed above the previous week's high. Again, a failure here to hold the previous week's high, 37.80, could open up a bit more of a pullback here within the previous session's range. In the short term, you can see here over the course of the last several weeks here, a nice little rounded bottom has developed. We have a very clear resistance that's developed across the highs. This market's pretty close to attempting to make a full-on breakout to the upside and retrade back to the FOMC key level from September and perhaps higher into yearly VWAP and the falling 200-day moving average. So that's these two levels right there. That's the 200. Here's yearly VWAP. That could be the push ahead if price can get through this current area. If there's a big rejection here, that could bring us right back down within the range, and we'd be testing 3,600 very, very soon. So we're right at the cusp here. Over the last couple of weeks here, we've seen price push above the 8-period average, which has been in a very nice upslope over the last 6 or 7 days here now. So any retest of the 8-period could provide a bounce opportunity, which slingshots us higher through resistance and much, much higher. So again, watching to see how this develops here early on, you can definitely make a case for a push higher out of this range. But at the same time, trading ranges here usually fall back into the range most of the time. Back and forth, back and forth, back and forth until that major breakout occurs. Is this a time where a breakout will occur? We will see. Again, these recent highs could open up some upside as high as 4,100 up ahead if we can push through this 3,800 zone. All right, let's take a look here at the NQ. Another narrow range for the NQ. The ES trading 27% of ADR. This one's at 22% of average range. Very, very narrow. Been averaging 365 points a day. Right now we're at 83.5 heading into the RTH Open. This one is held very nicely here off of the recent lows. This 11K level right here has held after pushing down below, back above, and then holding it here for a push back up. This one is lagging though. This one's lagging. The ES is certainly lagging the YM right now. But we could see a bit more upside here ahead. So on the upswings, again, the NQ's been lagging a bit. We could see a little bit more of an upswing and still be within the range. Right now, the 8-period average is serving as short-term support over the last week plus. So again, if we can hold that 260 zone on any pullback, we could continue higher. The FOMC key level above from September is about 12K, just above 12K, so that could be a good little magnet. And then we could see some overage to the upside if this rounded bottom starts to break to the upside. You have your yearly VWAP and falling 200 back toward 13K. All right, let's take a look here at crude oil. Crude oil right now, also a narrow range, inside day. This one has developed a 7-day range right now. So this 6-day range back here, very narrow. Now you have a 7th day that is developing here. Today's range is 58% of average. Inside day, again, if you bring this up to about 7 on a developing basis here, you can see how price has been building energy right in this zone over here. Look at this compression here, 60% of average. Very, very narrow range compared to other 6-day ranges. The potential here is for 10 to 12 points on a breakout move. 10 to 12 points on a breakout move from this range. It's compressing like this, so we may get a breakout sooner, maybe above 86s. And if you get 10 points, that takes you right to 96 very easily. You break down through 82, maybe you got 72 up ahead. But right now, this thing is building tremendous energy within a 7-day range that has energy that can take you easily to 10 points and is high as 15 points. Each of these rotations here were about 15 on those high 7-day breakout moves. So as much as 15 points, but as low as 10. Again, once we get a breakout from this range, we could be looking at some good directional conviction for about 10 to 12 points. But until then, could be back and forth price action until this thing's ready to see expansion. Lastly, looking at gold futures here. Gold has been mostly geared to the downside. We did get a strong double bottom here recently. Very, very strong double bottom that lifted price up. Since then, we're still in a downtrend. Failed new high in the previous session, and now a developing sell signal. This is still very early in the day, and it takes the close to really get this signal to paint. But this is a trend confirmed sell signal right here. Very similar to this one, very similar to that one. They're only going to fire in a confirmed downtrend, and the next 1 to 5 days could be lower. So if this thing does paint, we could be looking at another rotation back down. We do have a very good pivot high here at 1680. So if price is able to push through that pivot high, it opens up 1740 in the top of this range. So this is the range we're in right now. And again, the key edge right here, 1680. But the current downtrend suggests a bit more downside. If we do break to the downside, we could be looking at 1600 to about 1593 as the next short-term swing lower before maybe seeing a bounce again. So right now, showing a bit more weakness here in the near term. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.